Hello everyone. So today we are going to start with a new chapter, that is partnership accounts. So see, remember this partnership account is going to hold around 20% weightage in your whole examination. So basically out of 100 marks whatever you score, 20% of that will be from the partnership accounts. Okay. So this is a really important chapter. Please do not ever think to skip this chapter. So then let's start with the concepts. See, before starting this chapter, please start this chapter after you are done with the Partnership Act of 1932 in your law syllabus. In your law syllabus, once you are done with the Partnership Act of 1932, then come over here, because see, the basics of the partnership, whatever is there, that I am not going to cover over here. That will be covered in the law. Clear? So once that chapter is covered over there, then come to this chapter to understand how the accounts are done for the partnership firm. Clear? Okay. So you might already be knowing, assuming that you have already seen the video. Let me just start with it. So, what is a partnership, or what do you mean by a partnership? What does a partnership mean? A partnership is a relation between the partners of the partnership firm where they all or any one of them acting for all towards conducting a business, right? Partnership is generally for the profit motives where they share profit depending on the firm's deed, or if there is no deed, on a equal basis, right? Okay. What is a partnership firm? Partnership firm is a type of business, that is conducted through partnership between two or more people. Yes, okay. So let's see what is a partnership. Okay, let's go to the basics a bit. Not too much, but a bit of a basics. So partnership, a business carried on by all or any one of them acting for all. Right? The remaining partners can be a sleeping partner, whereas only one of them will be a active partner who will be acting on behalf of all of them. Clear? Okay. Then it has a unlimited liability of all the partners. See, we have two types. One is partnership firm, and one more is LLP. What does LLP mean? It is a limited liability partnership, right? So in this chapter we will majorly deal with the partnership firm only, where all the partners will have a unlimited liability. Now what does unlimited liability mean? Refer the law video. Then an association of two or more persons, right? See, if there's only one person, will that be called as a partnership? No, that will be called as what? That will be called as a sole proprietorship. That will be called as a sole proprietorship. But whenever there's a two or more people coming together to conduct a single business, that will be called as what? A partnership, right? Then sharing profits or losses in the business, the profit sharing ratio can be anything, whatever they agree to, or it can be on the equal basis between the partners. Then there should be existence of business. It's not like two or three people coming together and just sitting without doing anything. That won't be called as a partnership firm or a partnership business. There should be a business which is existing, and the partnership should be for the purpose of earning profits. An agreement entered into by all the persons concerned, right? It can be a written agreement which will be called as a partnership deed, or it can be an implied contract between them where there is no written contract between them and they agree to form a partnership and run a business in the form of partnership firm. Okay. Then let's look at some rules which are really important for solving our accounts. Clear? So the rules in the absence of partnership deed. So what to do when there is no partnership deed available? Whenever, see, we know that partnership deed is not a compulsion for the partnership firms, but in case of LLP it is a compulsion. But in case of partnership, under Partnership Act of 1932, it's not a compulsory rule to have a partnership deed. But what if there is no partnership deed? Then what to take for the purpose of accounts? Let's see. In the absence of an agreement to the contrary, we know that partnership deed is a what? Is a agreement. Is a agreement. No partner has the right to salary. So if there is no partnership deed, none of the partners will have right to get salary. Clear? None of the partners will have a right to get the salary. Then no interest shall be allowed on the capital. So whatever capitals they have invested, on that no interest has to be given. If there is no partnership deed, no interest should be given to anyone. Even if they have an internal dealing, it should not be given. Why? Because there is an absence of partnership deed. Because of that, there should be no interest given on capital. Then no interest to be charged since on the drawings. Since no interest is given on the capital, same way no interest to be charged on the drawings. Whatever drawings the partners make, we know what drawings are by now, right? So on whatever drawings the partners make, on that no interest to be given. Why? Because on capital also, when you are not allowing any interest, then why should the partner pay the interest on drawings? Clear? Okay. Then interest at the rate of 6% per annum, which is fixed by the act, to be allowed on partner's loan to the firm. Now what is this? See, whenever a partner is giving a loan, not a capital but a loan to the partnership firm, which should be returned to the partner once the firm has sufficient amounts of funds. So this loan, whatever is given by the partner to the partnership firm, by the partner to the partnership firm. On this loan, 6% interest can be charged per annum. On an annual basis, 6% interest can be charged. Clear? Then, profit and losses are to be shared equally. So, whenever there is no partnership deed, whatever profits or the losses the firm earns or incurs respectively should be divided on a equal basis on the ratio of 1 is to 1 is to 1, whatever the number of partners are. Depending on that, equally the profit should be divided or the losses should be divided between all of them. Clear? Okay. Where will this be necessary? This will be necessary while solving your questions. So in the questions they might give you a point that there is no partnership deed in this partnership. So then what to do? That depends on these particular provisions. On these particular provisions, it depends on how to solve the questions. Clear? Okay. Note, in the absence of an agreement, the interest and salary may be paid to a partner only if there is profit. So, in the absence of deed, there can be some profits paid. There can be some salary paid to the partners, but provided that there should be a profit in the firm. Okay, see this context, whatever is given to you, is from the law point of view. So for solving of the questions, we won't be considering this. Okay, we will only consider this particular part. Yes, fine. Going ahead. Okay, let's start. Directly start the question. See, chapter unit 1 and 2, that is on the introduction and on the goodwill. So these two chapters are really small chapters. Okay, this can be quickly finished. The part comes from the admission, retirement, dissolution, death. These are all the concepts that are really important, because for the examination, the questions will be asked from any of the four: admission, retirement, death, or your dissolution. Clear? Dissolution of the partnership firm. I think in your PUC, I think you might have studied your admission, retirement, and also the what? The death of the partner. But dissolution is something which is new for you people. Okay, fine. So let's start with the basics now. Okay. Ram, Rahim, and Karim are partners in a firm. Fine. They have no agreement. Remember this, they have no agreement in place. In respect of the profit sharing ratio, interest on capital, interest on loan advanced by the partners, and remunerations payable to partners. Okay. So with all these aspects, that is profit sharing, interest on capital, interest on loan advanced, and remuneration payable to the partners, there is no partnership deed that is maintained. In the matter of distribution of profits, they have put forward the following claims. See, this is the claims they have put forward, that what he believes to be done in the partnership. So, first one, Ram, who has contributed maximum capital, demands interest on capital at the rate of 10% per annum and share of profit in the capital ratio. But Rahim and Karim do not agree. Now, you tell me what to do. Whenever there is no partnership deed, what would we study? Should there be any interest on capital given to the partners? No, sir. No interest to be given. Right? So, let me just write it down. No interest on capital. Then point number 2. What does he say again? That share of profit should be in the capital ratio. So, whenever there is no partnership deed, we should share profits in the profit sharing ratio. In the equal ratio, right? Profits in equal ratio. So profits whatever are there or losses whatever are there should be divided in the equal ratio. Then next, Rahim has devoted full time for running the business and demands salary at the rate of 500 rupees per month. But Ram and Karim do not agree. Yes, they should not agree. Why? Because there is no partnership deed. It was not agreed on before opening a partnership, right? So because of that, whatever salary per month he is discussing should not be given. No salary will be paid. No salary to be paid. Why? Because there is no partnership deed. If there was a partnership deed and already they had mentioned that this much salary should be paid to Rahim, then we could have paid salary. But because there is no partnership deed, we cannot pay any salary to him. Okay? Then going ahead. Then Karim demands interest on loan of rupees 2000 advanced by him at a market rate of interest which is 12% per annum. Okay. First of all, the first question is, can the interest on loan be given to the partners? Yes. But at what rate it should be given? At the rate of 6%. Can I give it at 12%? No, sir. You cannot give it at 12%. You can only give it at 6%. So, interest on loan, interest not on capital, interest on loan at the rate of what? 6% per annum. 6% per annum. On the basis of 6% per annum, interest should be given to the partners. Okay, then. So what have they asked us? How shall you settle the dispute? Okay, so we have settled all the disputes over here clearly. Yes, then. Going ahead. Prepare profit and loss appropriation account after transferring 10% of divisible profits to reserves. The net profit before taking into account any of the above claims amounted to rupees 45,000 at the end of year. Okay, so first of all, let's see what to do. Okay, see, whatever the business might be, whatever the business you are dealing with. First of all, we prepare what? If I talk about the final accounts, after preparing my trial balance, what do I prepare? I prepare trading and P&L account. Yes, I prepare trading and P&L account, and then I go for what? Balance sheet. I go for balance sheet, right? This is what we have studied till now in the final accounts of sole proprietor. But while coming to partnership, there is some small changes over here. Okay, between these two, we prepare something. Okay, we prepare two different accounts now. One is P&L appropriation account. Appropriation. Now, what do you mean by appropriation? What do you mean by the term appropriation? Appropriation means division. Remember the word's name? It is called as division. For division, we use the word appropriation. Clear? Okay. Then we also prepare partners capital accounts or current account for that sake, depending on fixed and fluctuating, which we will deal further. So we prepare partners capital account. Where will the balance of this capital account go? To the balance sheet on the capital end. On the liability side of the balance sheet, the capital balances will be taken. So what is the flow then? So from trial balance we go to the trading and P&L account. Whatever profits we get from the trading and P&L account, that will be transferred to what? To the P&L appropriation account. Now sir, what happens in P&L appropriation account? In simple terms, in P&L appropriation account, we divide things. We divide the profits between the partners after charging interest on capital, interest on drawings, any salary to be paid to the partners. After dividing all these things, we get the actual net profit of the partnership firm. That is the profit which is divisible between the partners. That profit will be divided as per the ratios given in the question, either ratios or equally between all the partners. Clear? Then whatever balance you get in the P&L appropriation account, that will be transferred to what? To my partners capital account. Now what happens in the partners capital account? We prepare the capital accounts using the opening balance. Whatever profits are divided, whatever salary is withdrawn, or whatever interest on drawings are discharged, whatever drawings are done by the partners, and at the end we get the closing balance of the capital. We get the closing balance of the capital. Now where will this closing balance be transferred to? This will be transferred to my balance sheet account. This is the flow. See, in sole proprietor we should prepare trial balance, then we used to prepare trading and P&L, and then directly we used to prepare what? Balance sheet. But while coming to partnership accounts, we need to prepare two more accounts, that is P&L appropriation account and partners capital account. So the flow will be from this to trading and P&L account, from this to P&L appropriation account, and from P&L appropriation to partners capital account, and from partners capital account to balance sheet. This is the flow you need to follow. Clear? Okay. Now, in the question they have asked us to prepare P&L appropriation account. Now, let me teach you how to prepare P&L appropriation. If you know, it's good, but if you don't know, I will teach you the method. P&L appropriation account. Okay. Debits, credit. Now, P&L appropriation account is prepared exactly similar to your P&L account. That means, what do I mean by this? That means any losses or expenses will be taken on the debit side, whereas any incomes or any gains to the partnership firm will be taken on the credit side. This is how you prepare the P&L appropriation account. Clear? Okay. Now let me just draw the last part of the P&L account. As per the question, if you see, the profits at the year end was how much? 45,000. So where does the profit come? On the debit side, remember, net profit. How much is the profit? 45,000 rupees. Right? This is carried on. If it was a sole proprietorship, this would have directly been transferred to what? To my balance sheet, right? Directly to my balance sheet. But now in this case, I am preparing the accounts for partnership firm. So this profit will be transferred to what? To P&L appropriation account on the other side. How? By passing the entry by P&L account. How much is the value? 45,000. Clear? This is how you pass the entry in the P&L appropriation account. Now, let's start. Let me zoom this out. Okay. Now, okay. Let us see what items come in my P&L appropriation account. Let me just list it down for you. So first one is interest on capital, if any. Okay. Then interest on drawings. Then any salary paid. At the end, profit or loss distribution or division for that sake. These are the items that come in my P&L appropriation account. Clear? Whatever is belonging to the partners towards their partners' capital or the drawings. See, drawings is always linked to the capital, that we know by now, right? Because whatever drawings we do will reduce the value of my capital. So whatever drawings we do will be linked to my capital. So whatever items are linked to the capital will come under what? Under P&L appropriation account. But one thing you remember, that whatever interest on loan given by the partners is there, it will go to what? To the P&L account, to the P&L account, to the P&L account, not to the P&L appropriation account. So because of that, tell me what is the value of loan given. It is rupees 2000. On that, how much is the interest to be charged on the loan? It is 6% per annum. Remember the rules. Okay. So compute the interest. Interest on loan is how much? 2000 into 6% per annum, right? So that would be how much? 2000 into 6%, that is rupees 120. So this 120 rupees should be deducted from the profits first, and then the net profit, the actual net profit, should be taken to what? To the P&L appropriation. So I should not take 45,000 directly. What should I do? I should do this. 45,000 profit, whatever was there, carried forward from the P&L account, minus 120. What is 120? The interest on loan, which should be charged to the P&L account and not to the P&L appropriation account. So what is the net profit over here? 45,000 minus 120. That will be 44,880. Okay, fine. Now next, what has they have asked over here? Remember this part. Just erase this. Okay. See, prepare P&L appropriation account after transferring 10% of divisible profits to the reserve. So I should transfer some 10% of the profits to the reserves first, and then the remaining profit after this transfer will be divided between the partners. Clear? So because of that, I will pass a new entry, that is to reserves. Spelling mistake. To reserves. How much is the value? 44,880 into 10%. That is how much? 44,888. Okay. 4,488 is the value of reserves. Then after this, look at them one by one. Look at all the adjustments one by one. So first of all, what have we decided? No interest on capital and profit should be divided equally. So let's see. See, remember this. Whatever profits you get will be divided at the end of the P&L appropriation account. This is not a beginning. Whatever profits are there will be divided at the end of the P&L appropriation account. Remember this, okay? So let's keep this part at the end of the part. Then Rahim was devoted full time, so salary was not given, so no salary will be paid. So skip the salary part. Then interest on loan is already given to them, so done. So anything else is remaining? No. So what we can do is, whatever remaining profits are there can be divided between the partners. Now how to do that? 44,880 minus 44,888. How much remains? 40,392. So that means 40,392 should be divided between the partners. Now, to what? To partners capital account. Why is it taken to partners capital account? Because remember the flow I have told you. Remember this flow I have told you, right? From trial balance to trading account and P&L account, from there to P&L appropriation, and from P&L appropriation account, whatever appropriations we do will go to the partners capital account, and then from the partners capital account we will transfer the capital balances or the closing capital balances to the balance sheet. So from P&L appropriation I have to transfer whatever balance remains to the partners capital account. So therefore in my P&L appropriation account, what is the closing entry? To partners capital accounts. Now divide between whom? Ram, Rahim and Karim, right? So between Ram, Rahim and Karim. Now tell me, in what ratio should I divide it? Because I think one guy had told to use what? Capital ratio. Can I use capital ratio? No. Why? Because there is no partnership deed maintained over here. Because of that, I will share it in the equal ratio. Remember I told you before. Okay. So now what is the equal ratio? Divide by 3. Whatever profits you have, divide it by 3. So divide this amount by 3. How much is that? 40,392 divided by 3. So each partner will get how much? Each partner will get 464, 13,464 and 13,464. See, I have written all the values directly. So in the examination what you need to do is, Right, Ram. Then 4392 into 1 by 3. Why? Because I'm dividing it by between 3 people, right? So divided by 1 by 3. So this is how you need to write it in examinations, okay? I have just mentioned it directly over here. Clear? Okay. Now, after this, we would have prepared the partner's capital account, but in this question it is not required, but in the next question we'll see both P&L appropriation account and the capital account how to prepare it, okay? Yes. Let's go to the next question. Look at the question. Illustration number 3. A and B start business on 1st January 2022. Okay. So in this question, they have given us the question on the basis of calendar year. Remember this calendar year with capitals of rupees 30,000 and 20,000 rupees respectively. Okay. According to the partnership deed. Okay. In this question, there is a partnership deed that is maintained. Remember this, there is a partnership deed given to us. So whatever they have agreed to should be followed and should not be taken as a general rule. B is entitled to a salary of rupees 500 per month. Okay. Interest is to be allowed on the opening capital at the rate of 6%. Then remaining profits are to be distributed amongst the partners in the ratio of 5:3. Okay, let me just mark it. Okay, let me just mark this. So B is entitled to a salary of 500 per month. Then interest is allowed on opening capitals at the rate of 6% per annum. Then remaining profits to be distributed in the ratio of 5:3. Okay, fine. Now, then going ahead. During the year 2022, that is the current financial year or the current calendar year that we are dealing with, the firm earned a profit. Good. Before charging salary to B and interest on capital amount to rupees 25,000. So what is that? What is given over here? What is given over here? That whatever amounts they have given over here, these have not been charged yet to the P&L account. Before charging that, my profit is this much. My profit is 25,000 rupees. So now I should use this as what? This as the opening balance for my P&L appropriation account. Okay. During the year, A withdrew how much? 8,000 and B withdrew rupees 10,000 for domestic purpose. What is this? What is this? This will be called as my drawings. This will be called as my drawings. Why? It is used for the domestic purpose. 8,000 and 10,000. Okay. And B withdrew. So what have they asked us to prepare? Prepare P&L appropriation account and also prepare capital account of both the partners. So we know how to prepare P&L appropriation account. Let's prepare it now. So starting with P&L appropriation account. Debits. Great. Good. Okay. This is particulars, amount, particulars. Amount. Okay. So how do we start with this? So we start with the opening balance, that is by P&L account, that is the balance carried forward from the P&L account. So any adjustments to be done over here for interest on capital? No, because interest on capital, pardon me, on interest on loan, any amount given on interest on loan? No sir, only interest on capital is given, right? Interest on capital is given to us, that too on the opening capital. On the opening capital we need to compute the interest, see. Okay. So what is the profits? Rupees 25,000. Rupees 25,000. Okay, then after this, so let's start from the beginning then. So B is entitled to a salary of rupees 500 per month. So on the other side, see, salary is a expense to the firm, right? So therefore it will be debited, because I have told you that P&L appropriation account is prepared exactly similar to the P&L account, the profit and loss account. So to salary, but we won't write salary over here directly. We write to B's capital account, because this will be deducted as a deduction from the capital, right? This is a salary. Okay. What is this? How much is this? 500 rupees per month. So that would be 500 into 12. How much will that be? 60,000. 6,000. Okay. 6,000. Then next. So on the opening capitals, what should be given? Interest on capital. Interest is allowed on the opening capitals at the rate of 6% per annum. So because of that, again, to A's capital account, to B's capital account. What is this towards? Interest. Towards interest. Okay. Now computation. What is the opening balance? Rupees 30,000 and rupees 20,000. On that 6% per annum. Rupees 30,000 into 6%. Rupees 20,000 into 6%. Yes? Okay. How much is that? 30,000 into 6% is 1,800. Then 20,000 into 6% is 1,200. Yes, okay. Anything else to be paid? Anything else? During the 2022, the firm had earned a profit, so and so salary was given. Okay, done. Okay. A withdrew 8,000 and B withdrew 10,000. So tell me, is drawings expense to the firm? Is drawings, not interest on drawings, is drawings expense to the firm? No. Drawings will not be a expense, it will be a deduction from the capital. So drawings, whatever are there, will be taken to the capital account. Why capital account? Because it is a deduction from the capital. But if they had given us interest on drawings, in case if they had given us interest on drawings, in that case I would have mentioned it on the other hand, that is by interest on drawings of A and B, right? Partners capital account, AS account, B's account, whatever it might be. Depending on that, I will mention the drawings. But is the drawings interest given to us? No. Does the act mention anything about the interest if it is not mentioned in the partnership deed? No. Since nothing is given in the act, nothing is given in the partnership deed, I won't be taking any interest on drawings. Clear? I won't be taking any interest on drawings. Clear? Yes. Now, so what can I do? I can balance the P&L appropriation account now. So 25,000 minus 6,000 minus 1,800 minus 1,200. That will be how much? The closing balance is 16,000. 16,000. Now divide this between the partners. So 2 partners capital accounts. 2 partners capital account. A, B. 16,000, 16,000. In what ratio should I divide it? In what ratio should I divide it? Remember this. Remember this. So the whatever profits or losses are there will be divided in the ratio of 5:3. 5:3. So going back, 5 by 8, 3 by 8. Okay. If you are confused between why I did 5 by 8, please refer ratios, proportions chapter in maths. Okay, after completing that, please come over here because this chapter will be fully dealing with this particular part. So please deal it over there. I won't be going deep into it. Clear? Okay. So divide this now. 16,000 into 5 by 8, 10,000. Let's mention 10k over here. Then 16,000 into 3 by 8, 6,000. Done? Okay. Now I'll teach you a small trick over here. Okay. A small trick over here just to remember. See. This is the answer. This is the answer by the way. The answer is done over here. Just a trick for your examination purpose. See, let us say the profit was 16,000 as per the question. Yes, whatever the profit was there, I have taken it over here. Simple. Okay. Now this should be divided between the partners A and B. In what ratio? In 5 by 8 and 3 by 8. Now how to do this quickly? See, what I did just now is 16,000 into 5 by 8. I got 10,000 over here. Yes, and then again I did 16,000 into 3 by 8. So that would be 6,000. Right, this is what I did. But if you see, what did I do? I did in the calculator, in my calculator, what did I do? 16,000 into 5 divided by 8. The first one. So for the second one, 16,000 into what? 3 divided by 8. And I got my answers. Right. But if you see, in both of this, these two are common, right? Only thing that is changing is this is 5, this is 3, right? So what can I do? See, do it with me. 16,000 you write in your calculator, press MRC once, press MRC twice, 16,000, then press on once again, and then start. 16,000 divided by, do 16,000 divided by 8, press equals to, what do you get? You get 2,000. Okay, do not touch anything, simply now multiply 5 into 5 equals to how much? Equals, if I do, how much do I get? 10,000. So this is matching with the first answer. Yes, this is matching with the first answer. Okay, now do not touch anything, let the answer be shown in your calculator. Just type 3, and press equals, what do you get? You get 6,000, right? Now this is matching with what? This is matching with this part. Yes, okay. This is a shortcut way in which you can solve the questions clearly. Rather than doing this 2 times, what did I do? 16,000 by 8 into 5, 3. That's it. And just press the equal. So basically what happens is, I will tell you. Whenever you type 16,000 divided by 8 and press equals to, this 2,000 will be constant. This 2,000 will become a constant over here. Right? Then you press multiplied by 5 equals to, okay, it will multiply it with 5 directly and it will give you the answer. Then once you press 3, simple, don't press any multiplication, anything you don't press, just press 3. Okay, it will remember that I should multiply 3 with what? With 2000, because 2000 it now remembers because you have pressed equals to, so it remembers 2000 before. So press 3 and press equals to, you will get 6000 in your calculator. So this is a shortcut. So this will be beneficial when there are 3, 4, 5 partners. Sometimes in the questions in the dissolution chapter you might face this. Okay, you need to divide a value between 3 or more partners. So then again if you do the same thing, it will simply consume your time. Clear? So do this step. But if there are more partners, then what to do? Let us say the ratio was, let's say 3, 2, 3. Or else let's change this to 1 and this to 4. Okay, there are not these many ratios. What to do? Again, 16,000 divided by 8 equals to, press into 3 equals, I get 6,000 over here. 1 equals, I get 2,000 over here. 4 equals, I get 8,000 over here. Yes. So now that means if you just add all these 3, you will get the value as 16,000. Just check if you want to check. Clear? This is how we solve the questions clearly. Okay. So as per this question, we are done with what? Let's come back. So we have got the profit and loss appropriation account is done. So also prepare capital accounts of both the partners. Now we need to prepare the capital account. So let's prepare. Yes, now let's prepare partners. Capital account, we have debit over here, we have credit over here. Okay. Now tell me, before this format, right? So particulars, partner A, partner B, again particulars, partner A, partner B. Now, tell me this. Any entry on the credit side will increase or decrease? First of all, partners capital account, out of my 5 heads of accounts, remember journal entry chapter, out of my 5 heads, where will partners capital account come? Partners capital account will be a capital account. Why? Because this clearly says capital account, remember? Okay, because of this, it is a capital account. So now, what does the rule say? That any entry you pass on the credit side will increase the balance, any entry you pass on the debit side will decrease the balance. So that means partners capital account will always have a what kind of balance? Will have a credit balance. Will always have a credit balance. Remember trial balance? Yes. So now, let's start. So tell me, what is the opening balance of the capital as per the question? As per the question, what is the opening balance? Let me just erase all the things once. Okay. Now tell me, what is the opening balance? Opening balance of capital is given to us. So, what do you write? By the way, is this the opening capital or the capital infused? It is the capital infused. Why? Because as per the question, A and B start the business on 1st of January. Right? Because they are starting the business on the 1st of January. This is the not the opening capital, but this is the capital infused by them. So what is the entry then? In what form the capital was induced? In the form of what? In the form of cash or bank. Okay. So by cash or bank account, capital infused rupees 30,000 over for A. For B it is rupees 20,000. Okay. Then going ahead. Now find out all the entries that are increasing the value of capital. So first of all, I think we have what? Interest on capital over here, right? Interest on capital is being paid to them. So this will increase the balance of capital. So by interest on capital, I can write, instead of interest on capital, we will write what? P&L appropriation account. That is for interest, right? See, because we do not pass the entry as interest on capital, we have passed the entry as what? A's capital account and B's capital account. We have not passed the entry as interest on capital. Where will interest on capital entry be passed? In the P&L account. But we are preparing P&L appropriation account, right? We are preparing P&L appropriation account. Because of that, we pass the entry as capital accounts and not interest on capital account. Remember this in the examinations. Please do not miss. So what is the amount? 1,800, 1,200. 1,800, 1,200. After this, what else? We had divided the profits remaining, right, between the partners. We have divided the profits remaining between the partners. So how much is that? So by again P and L appropriation account, all of this are the transfer entries. Remember. So how much for the first partner is 10,000, for the second partner it is 6,000. Okay. Then after this, anything else? There were some drawings, right? There were some drawings done. What to do with this? What to do with this? It should be, see, drawings will reduce the value of capital. Drawings will reduce the value of capital. So therefore the entry will come on the debit or credit side. On the debit side. Why? Because it is reducing the value of capital. Whereas interest on capital and profits distribution will increase the value of capital. So I have created the entries, right? But interest on drawings will reduce the value of capital. So therefore I will debit the entries. So to drawings account. Should I pass the entry as P&L appropriation account? No sir. Why? Because we have seen that drawings has not been taken in the P&L appropriation account. We take only the interest on drawings. So if there was the interest on drawings, it would have come on the debit side as to P&L appropriation account as interest on drawings. But since we do not have any interest on drawings, that entry is not passed. So what are drawings? How much is the value of drawings over here? 8,000 and 10,000. So 8,000 and 10,000. Anything else is pending? Salary spending, right? So provide for salary also. By again what? P&L appropriation account. Salary. To which partner was the salary given? To which partner? To B's capital account. So therefore only to B I should pay how much? 6,000 rupees. So B's account, this is nil. So this is B's account. So 6,000 rupees to B, Mr. B. Okay. Anything else remaining? No, I guess. So the entry will be at the end to balance carried on. Whatever the closing balance is remaining will be carried forward to the next financial year, because we know that capital items whatever are there will be carried forward to the next financial year, right? So 30,000 plus 1,800 plus 10,000 minus 8,000, that will be rupees 33,800. 20,000 plus 2,000, 1,200 plus 6,000 minus 10,000, that will be 23,200. So where will this balance be carried forward to? This balance will be carried forward to the balance sheet as the as the closing balance of capitals. Clear? Okay. Now going ahead. Now, since we are done with the P&L appropriation account, now I will teach you how to compute the effective capital and the interest on drawings or interest on capital, both the values. Okay, how to compute it? See, let me just go into the theory a bit. Let us say the question says Mr. A has withdrawn drawings. Okay, Mr. A has withdrawn rupees 10,000 on let's say 1st of Jan 25, for example. Okay, so from when will you compute it? And B, let's say his capital balance. This is his drawings. His capital at the beginning of the year was let's change the question a bit. Okay, let's make it April. Okay, and the capital balance on the beginning was rupees let's say 15,000 on 1/1/25. We are following calendar year over here. Now tell me, how will you compute the interest? Let's say 5%, or let's say 10%. 10% for both drawings and for both the drawings and capital, the interest is 10% per annum. Now compute the interest. Let's see. So interest on capital. What will you do? Let's say two different balances are given. Okay, let's change the question a bit. 25,000 on year end, on 31st of December 25. Now what will you do? You will first of all compute the interest on capital on the opening balance only. Why? Because the closing balance was there only till the year end, but this 15,000 was there for the whole year. The 15,000 was there for the whole year, right? Because of that, it will be computed on the basis of for 12 months. For 12 months, we will compute this. Clear? This is the per annum. This is the per annum interest given to you. Whatever the interest rate of 10% is given is a per annum basis. But coming to my drawings, what do I do? I will compute the drawings for only the period it was due. From April till December. From April till December. How many months? How many months? April, May, June, July, August, September, October, November, December. So for 9 months I will compute what? The interest on drawings. Clear? Okay. So keeping this as the base, okay, simply we need to do 9 by 12. Remember, we have studied it 10,000 into 10% into 9 by 12. This is what we need to do to compute the interest on drawings. Whereas for capital, simply 15,000 into 10%. Enough, more than enough. Clear? Okay. What to do with the closing balance? I will tell you now. Look at the question. Illustration number 5. A and B are partners sharing profits and losses in the ratio of their effective capital. Okay. Now what do we mean by effective capital? I will tell you how to compute the effective capital. This is the capital, average capital. Assume it to be an average capital during the year. Clear? They had 1 lakh and 60,000 rupees respectively in their capital accounts on 1st of January 2022. So on 1st of January 2022, they had 1 lakh rupees and 60,000 rupees in their capital accounts. Clear? Okay. Remember this. Just mark this. On what date? On this date. Now, next. A introduced further capital of rupees 10,000 on 1st April. It is on the year beginning only. Then another 5,000 on what date? On what date? Sorry, on the 1st April. That is after 3 months. Right? We are following calendar year over year. Remember, we are following calendar year. Okay. Then another 5,000 rupees on 1st July 2022. On 30th September, he withdrew rupees 40,000. He withdrew rupees 40,000 rupees. Okay. On 1st July 2022, B introduced a further capital of rupees 30,000. Fine. Partners drew the following amounts in the anticipation of profits. Okay, these partners have withdrew the capital, assuming that there will be profits. A withdrew rupees 1,000 per month at the end of each month, beginning from January 2022. Okay. B withdrew 1,000 on 30th June, 5,000 on 30th September 2022. Okay. Fine. So this is what? This is drawings. I just mentioned it in a proper ink. This is what my drawings. Okay, and this is what? This is my capital adjustments. This is my capital adjustment. Clear? Okay. Now, 12% per annum interest on capital is allowable and 10% interest on drawings is chargeable. Date of closing of the year is 31/12/2022. That means we are following what? Calendar year. Calculate profit sharing ratio, interest on capital and interest on drawings. Okay. Let's look at it one by one. So first of all, they have asked us to find what? Find what? Profit sharing ratio. So what is the profit sharing ratio as per the question? See, partners were sharing profit and losses in the ratio of their effective capital. Now what does effective capital mean? Let us see. Let us talk about partner A. Okay. So computation of effective capital. Okay, now let's see what to do. So first of all, tell me, let's start with A. Okay, B's will compute over here. So what is the opening capital? What is the opening capital? As per the question, it is rupees 1 lakh for partner A, right? So 1 lakh. Then what has happened? Then look at this para. A introduced further capital. A introduced further capital of rupees 10,000 on 1st of April, right? So let us just write it down for now. For now, just write it down. So this is on what? 1/1/22. Then 10,000 was added. 10,000 was added on 1st of April 22. Then what has happened? Another 5,000 on 1st of July. So another 5,000 rupees has been added on 1st of July 22. Then next, on 30th September he withdrew rupees 40,000 on September what? 30th. Okay. So he withdrew how much? 40,000 on September 30th. Now find out the balances on each date. See, from 1st of January to 1st of April, how many months? How many months? Jan, Feb, March. So a period of 3 months. So for this 3 months, what was the capital balance? What was the capital balance? It was rupees. It was rupees 1 lakh. Right? See, till till this point there is no change. Till 30th, no, sorry, till 31st of March 2022, there is no change in the capital. It is rupees 1 lakh only. Right? So therefore, what I will do is 1 lakh into 3 months. 1 lakh into 3 months. Then now tell me from 1st April till 1st of July, what is the value of capital? 10,000 rupees has been added. 10,000 rupees has been added. So now the new capital is how much? New capital is how much? 1 lakh 10,000 rupees, because he has added a capital of 10,000 rupees. For how many months was the balance rupees 1 lakh 10,000? From April till 1st of July. So April full month, May, June, till June end, right? So again 3 months. Fine. Next, going ahead. Again he has added how much? 5,000 rupees. So from 1/7 till 30/9/2022, how much is the period? How much is the period? First of all, before checking the period, what is the amount of capital? He has added 5,000 rupees on that date, right? So the new capital balance is how much? 1 lakh 10,000 plus 5,000. That is 1 lakh 15,000 rupees. 1 lakh into how many months? July, August, September. So for 3 months. September full. Why? Because 30th of September. So for full month the balance was 1 lakh 15,000. So again for 3 months. Then from this date till the year end, that is 31st 12 22, what is the value of capital? It is rupees how much? 75,000. Why sir 75,000? Because he has withdrawn a capital of rupees 40,000, right? So 1 lakh 15,000 minus 40,000 will be how much? 75,000 will be 75,000. So this is the new capital from what date? From 30th September 22 till 31st of December 22. That is till my year end, because till the year end no other entries are given to me, right? Okay. Now tell me how much is the period? How much months are passed for with rupees 75,000 as a capital? September full month is cleared here only, so leave it. So September, October, November, December, again for 3 months. Again for 3 months this was the capital. So now find out the values over here. So first of all, 1 lakh into 3 will be straight away 3 lakh. Then 1 lakh 10,000 into 3, that is 3 lakh 30. Then 1 lakh 15,000 into 3, 3 lakh 45,000. Then 75,000 into 3, that is rupees 2 lakh 25,000. Total all of them. 3 lakh plus 3 lakh 30 plus 3 lakh 45,000 plus 2 lakh 25,000 equals to rupees 12 lakh. Clear? 12 lakh. See, over here, you might ask me now, sir, they have withdrawn, right? They have withdrawn some money also. This we are considering separately for the purpose of interest on drawings computation. Because of that, I am computing only for the capital over here, and for drawings, I am computing it separately. Clear? Okay. Now for Mr. B, pause the video and try to compute it for Mr. B also. That is illustration number 5. From illustration number 5, try to compute it for Mr. B, and I will just start with it now. Okay. So pause your video and do it and check it with my answer now. So for Mr. B, he has simply introduced a capital of rupees 30,000 rupees. On what date? On 1st of July. Okay. So what was his opening capital? What was Mr. B's opening capital? Rupees 60,000, right? Rupees 60,000 was his opening capital, and on 1st of July 2022, he has introduced how much? Rupees 30,000 as a further capital. Rupees 30,000. So plus 30,000. Okay. Now tell me. 60,000 was the balance till what date? Till 1st of July 2022. So how many months? Jan, Feb, March, April, May, June. Right? So for 6 months the balance was 60,000. So 60,000 was the balance for how many months? For 6 months. And then the balance has increased by how much? 30,000 rupees for the remaining months. So that would be 90,000 into 6 months. Into 6 months. Okay. So tell me the totals over here. 6 6 are 36. So 3,60,000 rupees. And over here 9 6 are 54. So 5,40,000. Total will be 3,60,000 plus 540. That will be 9 lakh. 9 lakh rupees is the closing balance of capital. Okay. Now whatever values you have got, that is 12 lakh and over here 9 lakh, is called as what? Is called as effective capital. Is called as effective capital. Now since they have asked me find the profit sharing ratio, and the question says the profit sharing ratio is what? In the ratio of their effective capital, in the ratio of their effective capital. So therefore the profit sharing ratio is how much? Ratio is how much? 12 lakh is to 9 lakh, right? So I just write it as 12 is to 9. I can further simplify it as what? 4 is to 3. Ratio chapter in mathematics, I won't teach you how to do it, remember? Okay. So the new profit sharing ratio is how much? 4 is to 3, depending on their effective capital. Depending on their effective capital. Clear? Okay. See, understand this particular step. This is really important because in some questions they might ask you to compute based on the effective capital. It might not be asked in the general sense, but chances are that they might ask it because the questions are clearly given in your textbooks. Clear? Okay. Now, next part. Find the interest on capital. Now, how to find interest on capital? See, sir, for these many periods they have put in capital different times, right? Different months over here. How to compute it? Since we have computed the effective capital already, we can simply compute it by this way. See. Computation of interest on capital. Okay, for Mr. A, what is the capital? What is the effective capital? It is rupees 12 lakh. It is rupees 12 lakh. Into what is the rate of interest for the capital as per the question? 12% per annum is the interest on capital allowable. So, into 12%. Why do we pay interest on capital? Because these people have invested some money into the business, right? Because of that we can pay a interest on capital also, right? So into 12, but this was for the whole year, so into 1 by 12 to average it out, clear? So the value will be 12 lakh into 12% divided by 12, that will be 12,000 rupees is the interest on the capital, clear? Now in case of Mr. B, what is the capital value? 9 lakh rupees, remember? Into again 12% into 1 by 12. That is how much? 9 lakh into 12% divided by 12. That would be 9,000 rupees. That would be 9,000 rupees. This is how you compute the interest on capital. Now coming to computation of interest on drawings. How to compute this for A and B? So tell me the drawings on different dates. So let's start with A. A drew 1000 per month at the end of each month beginning from January 2022. Now tell me what to do. Now let us compute the interest on drawings. Computation of interest on drawings. So let's look at the question. So A withdrew 1000 per month at the end of each month. That means since we are following what? Since we are following calendar year, when was the drawings done? In the January month. On the 30th of Jan. And in the December month, when was the drawings done? On the December end, right? On 31st of December. Okay. From the beginning of January 2022. Okay. Then B withdrew. Okay. B we will see afterwards. First of all, look at A. So A has withdrawn how much? 1000 per month at the end of each month from the beginning of January. So how many withdrawals has been done by him? How many drawings has been done by him in each month? One drawings, because January end, February end, March end and so on till December end. So 12 drawings has been done. So how much is the value of total drawings done by him? That is 1000 into 12 months, right? So how much drawings has been done? 12,000 rupees has been withdrawn. Then he has withdrawn at the end of each month. No. Now there's a small change in the formula. The formula changes like drawings into percentage, that is at 10% as per this question, into average months divided by 12. Now how do you compute average months? Average month is computed by opening plus closing divided by 2. Now what do I mean by opening? For how many months was the first drawing due? For how many months was the first drawing due? Now you people tell me, if the drawing was done on January end, if the drawing was done on January end, for how many months will it be due? For 11 months. So the opening will be 11 months. Then the last installment of drawings was done on what date? On 31st of December. So tell me, for how many months is it due? For 0 months. For 0 months. Clear? Because if it is drawn on the last of the month, last day of the year, there is no month which is due for that particular calendar year. Right? 2022, it is due for only 0 months. So divided by 2. How much will that be? 5.5 months. So now how do you compute it over here? So 1000 into 12, because 1000 per month into 12 months into 10% is the rate. Let me just check the rate once. See, 10% on the drawings is the interest per annum, right? So 10% per annum into average months. How much is the average month? 5.5 divided by 12 months. That will be how much? That will be how much? 1000 into 12 into 10% into 5.5 divided by 12. That will be rupees 550. That will be rupees 550. Sir, why did you do this? Because see, it has been drawn 1000 rupees per month on an equal basis, right? On equal number of amount was drawn for a whole year. There is no stoppage in between. There is no stoppage in between. Because of that, I can use this formula. I can use this particular formula to find out the average months. Or else, what should I do? I should do this. See, remember, I should do this. For January's withdrawal, 1000 into 10% into what? Into 11 by 12. Then for February month's withdrawal, 1000 into 10% into 10 by 12. Why 10 by 12? Why 11 by 12? Because it was due for these many months. The amount withdrawn was due for this month. So for January, since it was withdrawn in the month end of the January, because of that 11 months it is due or outstanding for the firm, right? And so on for all the months I need to do. Till December, what will I do? Till December, what do I do? 1000 into 10% into 0 by 12. That will become a 0 over here. Clear? So if you see, opening is 11 and the end is 12, 0. So what you can do? 11 plus 10 plus 9 and so on plus 1 plus 0 divided by 12 will be how much? Will be again 5.5 months. So if you want to try, you can just try it out. You can try it out. What is this that I have done over here? I have averaged it. That's it. I have not done nothing big over here. I have just averaged all the months. See, 11, 10, 9, 10, 11, 10, 9, 8, 7 till 0. How many numbers will that be? It will be 12 numbers. So divide by number of months. That is 12 months in this case. That's what I have done. Clear? Okay. This is to be done whenever the amounts are same. That is withdrawn for each month, for the whole year, for the same rate of interest. In that case, you can use this formula easily. Okay. But what if it changes? In that case, look at Mr. B. Mr. B drew rupees 1000 for on 30th June and 5000 on 30th of September. In this case, what to do? In this case, compute the interest on drawings for each month separately. Okay. First of all, drew 1000 on 30th June. So let me just write it down. Okay, for you people. Okay, I will just mention it over here only. Interest on drawings for Mr. B. Right. So first of all, on what date? On 30th of June, rupees 1000. On 30th of June 22, how much rupees? 1000. And then again on 30th of September, 5000 rupees. On 30th of September, 5000 rupees. So compute the interest now. How will you compute it? Into how many months was this due for? From 30th of June till the December end. How many months? June, I can leave it because it is the end of the month. So July, August, September, October, November, December, for 6 months. So into 6 by 12 into rate of interest, it is 10%. How much will that be? 1000 into 6 by 12 into 10%, it is 50 rupees. 50 rupees. And over here into how many months? From September till December. September month I need to leave. Why? Because it is a September end. So October, November, December, 3 months. 5000 into 3 by 12 into 10% interest rate equals to into 3 by 12 into 10%. That is 125. Right. So how much is the total? 1 75 is the total drawings over here, and over here in this case it is rupees 550. Clear? Yes. Now let us start with the next topic, that is fixed and fluctuating capital. So what is the fixed and fluctuating capital? So each partnership firm has the option to decide on their capital, on what basis to prepare the capital accounts. It can be either fixed or it can be fluctuating. Generally, in general sense, all the partnership accounts are prepared on fluctuating basis. So if I have to say, if the firm is preparing on fluctuating basis, it will prepare only capital account. Only capital account will be prepared. Only capital account will be prepared. But if it is following fixed basis, then it will prepare two accounts, that is capital account and something called as current account. Now what are the entries to be passed? See, first of all, list down all the entries that will be passed. So let me start with fixed basis first of all. Okay, why I will tell you. In capital account, whatever I prepare, I pass only following entries. 1. Capital introduction, and 2, that is capital withdrawn. Only 2 entries will be passed in the capital account and no other entries will be passed in the capital account. Remember this. Okay. Now coming to current account, what entries will be passed? 1. Start with all the miscellaneous entries, that is interest on capital, then drawings, then interest on drawings, then what else? Profit or loss appropriation, right? Whatever comes from the P&L appropriation account. Remember. Then what else? What else is pending? Any reserves that has to be divided. That we'll see in the during the admission time, how to divide it. Okay. Any reserves or provisions that have to be divided. Okay. All these entries come in what? In my current account. But in my capital account, only capital introduction and capital withdrawal entries will come up. Because of this, the capital won't change regularly. See, whenever I introduce or withdraw capital, will that be on a recurring basis? No, because capital will be introduced at once in the beginning of the business. And if there is a requirement, and then let's say after 5 years, 6 years, more capital is required for expansion or adding any more activities, then I will introduce more capital, right? So it is a non-recurring activity. Same goes for capital withdrawn. I won't be withdrawing capital on a regular basis. I will withdraw it on a non-recurring basis. Right, non-recurring basis. Because of that, my capital figures won't change regularly. But whereas my current account, it will change on a regular basis. Why? Because of all these entries. And we know that these entries are recurring entries in a partnership firm. In a partnership firm, profit or loss will be there. Drawings will be there. Interest on capital will be there. Same goes for all the other entries. So these entries will go on changing the value of current account. So current account can have a debit balance or can have a credit balance. But capital account will always have a credit balance. Why? We know the rule. That capital accounts will always have a debit balance. Clear? Okay. Now coming to my fluctuating basis. See, fixed basis, what does that mean? That means my capital account will be fixed. It won't change on a recurring basis. Right? But coming to my fluctuating capital basis, the capital will go on changing. That means there are no two different accounts being maintained. Only one account is maintained, that is capital account. And all these entries will be passed in what? In the capital account itself. Because of these particular entries, the capital balance will go on changing year on year. The capital figures will go on changing. Remember this, clear? Whenever I don't want to change it, I have to maintain it on a fixed basis. I will prepare two different accounts. Because of that, capital will not change again and again. Whereas in my fluctuating basis, all the entries, whatever entries you want to pass, will be dumped in what account? It will be dumped in capital account. Clear? Okay. Now look at the question. So illustration number 6. Ram and Rahim start a business with capital of rupees 50,000 and 30,000 rupees. Okay. On 1st of January 2022. Okay. Again we are following what? We are following calendar year over here. Rahim is entitled to a salary of rupees 400 per month. And see, nothing is given regarding the partnership deed. Okay, allowing the terms as per partnership deed. Okay, so as per partnership deed, the terms are given. So whatever is given the question, we need to strictly follow it. So Rahim is entitled to a salary of rupees 400 per month. Let me just mark it. So Rahim is entitled to a salary of rupees 400 per month. Then interest is allowed on capital at the rate of what? And on drawings. Okay, from on drawings and capital, we are charging an interest of 6% per annum. Then profits are to be divided equally after above noted adjustments are made. So after making all the above adjustments, whatever profit remains, that has to be divided what? On the equal basis. Then during the year, Rahim withdrew 8,000 and Ram withdrew 10,000 rupees. Okay, these are what? These are my drawings. Okay, Rahim and Ram withdrew 8,000 and 10,000 respectively. The profits for the year before allowing terms of partnership deed is how much? Rupees 30,000. That means after preparing P&L account and before adjusting all these entries, what is the profit of the business? It is rupees 30,000. It is rupees 30,000. Okay. Then, assuming capitals are fixed, how many accounts to be prepared? Two accounts. Why? Because capital is fixed, and we know that whenever capital is fixed, we prepare capital account and current account. Where in my capital account I will pass only these two entries, and in my current account I will pass all these entries, all these miscellaneous entries. Clear? Okay. Assuming the capitals are fixed, prepare P&L appropriation account and capital and current accounts of the partners. Okay. Now let's start. So let's prepare P&L appropriation account. My debit, this is my credit. Okay. So where will the profit come up? Whatever profit of the P&L account was there will come up on the credit side. So the entry will be what? The entry will be what? By P&L account. Rupees how much? Rupees 30,000. No other adjustments to be made. Okay. Now go start with all of them one by one. So Rahim, we have paid salary of rupees how much? 400 rupees per month. So on the which side? Debit side or credit side? Since salary is the expense to the firm, the entry will come on the debit side. So to partner's capital account, right? So which partner? So Rahim's account or Rahim's capital account or current account? Capital account or current account? See, in this question they have clearly told us that to maintain the capital on a fixed basis, so we will maintain two different accounts. So tell me this, where the salary will go? It will go to my current account, not my capital account, to my current account, because it's not a capital item as per this question. So to current account, how much? This is my salary. How much? Rupees 400 per month. So 400 into 12 will be rupees 4,800. Okay. Then after this, interest is allowed on capitals and interest is charged on drawings at the rate of 6% per annum. So first of all, interest on capital we will find out. Rupees 50,000 into 6% and this. So 2 Ram's capital. What is this? My interest on capital, right? So that will be 50,000 capital amount, opening capital, because closing capital value is not given to us, only opening capital is given to us. So 50,000 into 6%, that is how much? 50,000 into 6% is 3,000 rupees. Then Rahim's capital is how much? Rupees 30,000. So to Rahim's capital account, rupees 30,000 into 6%. Just write it down. 30,000 into 6%, that is 6 is 18, so 1,800. Okay, then after this, interest on drawings is allowed, right? Interest on drawings is also charged at the rate of 6%. So what is the drawings? 8,000 and 10,000. So on the debit side or credit side? On the debit side or credit side? See, interest on drawings is something which we receive in the firm. See, partners withdraw, right? Partners draw something from the firm. For that, they pay the interest to the partnership firm. So it's the income for the firm. So therefore, on the credit side, by Ram's current account, sorry, I mentioned capital account over here, my mistake. It is Ram's current account and Rahim's also current account, because we know that it is not a capital item and it will be taken in the current account in this case. So to Ram's, don't make the same mistakes. Interest on drawings. How much is the value of drawings? 8,000 for Ram. So 8,000 into 6%. How much will that be? 8,000 into 6%. So rupees 480. 8,000 into 6. Rupees 480. Similarly for Rahim, by Current account, how much is that? How much is drawings done by him? Rupees 10,000. So this will be 600, I guess. 10,000 into 6% is 600 rupees. Okay. It is 10,000, right? 10,000. Okay. Fine. Next. So nothing else to be done. Okay. So we are done with the P&L appropriation account. So finalize this. So to partners, what account? Partners current account, because we know that whatever P&L appropriation was there will be transferred to partners current account and not capital account, because capital account is fixed in this question. So Ram and Rahim over here. So how to divide it? Equally to be divided. So what is the balance, closing balance? Find out the closing balance. 30,000 plus 480 plus 600 minus 4,800 minus 3,000 minus 1,800. That is 21,400. Sorry, 480. So now divide this by 2. Why? Because equally divided between two partners, right? So 10,740, 10,740. Okay. This is the first way of preparing the P&L appropriation. Okay. There might be a small change in this part. In interest on drawings, there can be a different adjustment also. See, this is the adjustment when I am assuming that. This is the adjustment when I am assuming that. Assuming drawings are done on year beginning. Okay. Second type of adjustment will be when drawings are done during the year. So in this case, in your textbooks, what they have done is, let's take the drawings for the first person, that is Ram, 8,000 rupees, right? So in case of Ram, what I do is, Ram, 8,000 was a drawing. Okay. In the question, they have nowhere mentioned that it is in the beginning of the month. So we can assume either it is in the beginning or during the year. So in the beginning, if it is withdrawn, I showed you how to do it, right? Okay. But if it is assumed that it is done during the year, then what to do? Then you will average it out. How to average it out? 8,000 divided by 2 into the rate of interest, that is 6%. How much will that be? 8,000 divided by 2 into 6%. That is rupees 240 for Ram, and for Rahim it is 10,000 was the drawings amount divided by 2 into 6%. Which is how much? 5,000 into 6%. That is rupees 300. This is the only change that will be done if it is assumed that it is during the year. In the examination, whatever approach you follow, please mention the assumption clearly at the end of the answer. Assumed that the drawings are done at the beginning of the year and charged for the whole year. Assumed that it is done during the year and we have taken it for the average drawings done during the year. Why is this average? Because see, 0 plus 8,000 divided by 2. This is the average. That will be how much? Rupees 4,000 into 6%. That will be again equals to how much? Rupees 240. This is what I have done. Clear? Opening plus closing divided by 2. Opening plus closing divided by 2. Clear? Okay. Now, what is the next step? What is the next step to be done? We need to prepare what? Preparing P&L appropriation is done, and we need to prepare capital accounts and current accounts. Now prepare capital and current accounts. Okay. Now, okay. First of all, tell me what is the opening balance of capital. See, since they have started the business, that means we need to pass the first entry for capital infusion, right? Okay. So let's prepare partners capital account first. Debit, credit. So in partners capital account, what happens? Any entry that I pass on the credit side will increase the balance. Any entry I pass on the debit side will decrease the balance. Since they have infused capital, will the balance of capital increase or decrease in the business? It will increase in the business. So whenever it increases, we will create the entry. So what the entry will be? By cash or bank account. By cash or bank account, right? This is Ram, this is Rahim. Here also, this is Ram, this is Rahim. Okay, what is the capital being infused? rupees 50 and 30,000 rupees. So 50,000 rupees, 30,000. Okay. Any more entries? Any withdrawal runs from the capital? No. Any addition of capital? No. So in this case, I can just close the account now. So to balance carried on rupees 50,000 over here, rupees 30,000 over here. Yes. Okay. So this is the first part of the answer. Now next, we need to prepare what? Partners current account. What comes in partners current account? What comes up in partner's current account? All the other miscellaneous entries that were not to be taken to the capital account, right? Because as per the question, we need to follow the fixed capital system or fixed basis. So first of all, any opening balance of the capital account given to us, sorry, of the current account given to us? No. No opening balance of current account given to us. So because why? Why? Because we are in the starting of the business. We are in the starting of the business. So there is no balance available for current account. So start as it is. Then first of all, what will it take? All these entries, remember? Okay, let's start with the salary part. So Rahim's account salary, I think you have mentioned the answers, right? Please write down the answers in your notebook so that for the reference, cross reference, this will be better for you. So start one by one. So first of all, salary 4,800 Rahim, salary will come on this side. So by P&L appropriation account is for salary 4,800. This is Ram, this is Rahim. Then current account, I have taken what? I should take what? Interest on capital 3,000 and 1,800. 3,000 and 1,800. So by again P&L appropriation account. This is what? Interest on capital. Then what next? There are profit division, right? 10,470, 10,470, right? So again profit division on the credit side only. So by P&L appropriation account, profit 10,740. 10,740. See, this answer might vary from the textbook. Why? Because I have taken a different approach. So to make you people understand. But as per the textbook, if you are following that method, you can get the different answer. Clear? Okay. Don't get confused. Then after this, interest on drawings was there, right? But before drawings, what is there? Interest on drawings. We have drawings itself, right? So drawings again comes on which side? See, current account will also follow the same nature as per the capital account. Remember this, current accounts will also follow the nature of capital account. So that does not mean that current account should have debit balance or credit balance. It's not a rule over there. But for capital account, the rule is the capital account should have a credit balance. Whereas current account might have a debit balance or a credit balance. But for seeing whether to debit the entry or credit the entry, for that we need to check what? We need to check follow the same nature as per the capital account. Remember. Okay. Since drawings reduces the value of capital, we will create the account. So to what? To drawings account or to bank account also I can take. How much is the value? 8,000 and 10,000. Then interest on drawings, how much? 480 and 600. So to P&L appropriation account, how much? 480 and 600. 600. At the end, what do we get? We get the balance carried on, the closing balance, right? So 3,000 plus 10,740 minus 8,000 minus 480. That is how much? 5,260. And over here 4,800 for Rahim plus 1,800 plus 10,740 minus 10,000 minus 600 equals to 6,740. Yes, we are done with the capital accounts also. This is how you do it. Clear? Clear with this? Okay. See, there might be a chance that this balance could have come on the credit side also. For one partner, it will be a credit balance. For one more partner, it can be a debit balance also. Fine? Okay, look at the question. This is from your test your knowledge or the last part, practical questions. Weak, able, lazy are in partnership, sharing profits and losses in the ratio of what? 2 is to 1 is to 1. Fine. Okay. The ratio is given to us. That is, this is the ratio. Okay. It is agreed that interest on capital will be allowed at 10% per annum and interest on drawings will be charged at 8% per annum. Okay. So, capital interest is this much and for drawings it is 8% per annum. Okay. No interest will be charged or allowed on current accounts. Okay. So whatever current account balances you have, on that no interest will be charged or no interest will be allowed for the partners. Only capital account balances we need to see. That means what method are they following over here? They are following fixed basis for capital maintenance. Okay, they are following the fixed basis for capital maintenance. Then following the are the particulars of capital and drawings account of the partners. Okay, they have given us the capital account balances for all the three partners: 75,000, 40,000, and 30,000 rupees. Then current account balances as on 1st of January 2022. So that means we are following the calendar year over here. So 10,000, 5,000, but over here it is debit balance of rupees 5,000. That means whatever balances of 10,000, 5,000 are given to us is a credit balance, whereas this is a debit balance. Remember this, okay? Because they have clearly mentioned it is a debit balance. See, I have told you that current account follows the nature of capital account. That means in general sense, if everything goes well in a business, if there is a business is profitable, that means we are having a credit balance over here. Okay, in current account also. But if there is a loss incurred by a partner more than n number of times, in that case his account can have a debit balance for current accounts also. Fine. Now drawings are given to us 15,000, 10,000, 10,000. Okay. The draft of accounts of for 2022 showed net profit of rupees 60,000 rupees. Fine. Before taking into account the interest on capitals drawings and subject to following rectification of errors. Now what has happened over here? We have a combination of partners, capital account and a combination of rectification of errors. Let us see. See, this profit of rupees 60,000 is before adjusting all this, the interest or whatever it is. Okay. But after adjustment of all this. So now we need to reverse all this. Let's see why. First one. Life insurance premium of week amounting to rupees 750 paid by the firm on 30th of June has been charged to miscellaneous expenditure account. So what has happened over here? A life insurance premium of week. So that is a what? Drawings. Remember I told you in the final accounts that whatever life insurance premium we have will be a drawing to the firm and not a firm's expense. But what they have done over here, they have charged it to miscellaneous expenditure account. That means my profit has reduced. Because of this particular entry, my profit has reduced more. So I need to reverse it now. While reversing it, what happens? This will be added back to the profits. Why? Because it was a wrong expenditure taken in the name of the firm. Clear? Okay. Repairs of machinery amounting to rupees 10,000 has been debited to the plant account and depreciation has been charged thereon. Whenever there is a repair, it is a recurring expense, and whenever it is a recurring expense, it is a revenue expenditure, and revenue expenditure should be taken to the P&L account, right? But here what they have done? Here they have taken it to the plant and machinery account. They have increased the value of plant and machinery account, right? They have increased the value of plant account. Right, whenever I debit any plant account, it will increase the value of plant account. This has been taught to you people. Then, and on that I have charged depreciation also. Arey yaar, I have taken the value of rupees 10,000 as the plant, and I have charged depreciation of 20,000 rupees again. Clear? Okay. So two different adjustments to be done. Remember this. Okay, remember this. Traveling expenses of rupees 3,000 of able for a pleasure trip. When you are using some money of the firm for your own expenditure, for your own pleasure, will be firm's expense? No sir, it will be a, again what? It will be a drawings. It will be a drawings on 30th of June. Okay, so remember dates are really important. Why? Because drawings are done on this particular dates, right? Has been debited to traveling and expense account. Again, this has been taken as a firm's expenditure. So because of that, what to do with this? This should be taken as a drawings and not an expense. So add back to the profits of the firm. You are required to prepare P&L appropriation account, current accounts of partner weak, able and lazy for the year ended 31st December 2022. They are not asked you to prepare capital account. They have asked you to prepare only current account and P&L appropriation account. Now, let us brainstorm first of all. See, they have given us the profits. They have given us the profits, which will be taken as the opening balance of P&L appropriation account. But what has happened over here? Whatever profit has been given to us is not proper. We need to make it correct. How? By adjusting all these entries now. Yeah? By after rectification of all these entries, what will change? First of all, our value of profit changes. Secondly, value of our drawings changes, because whatever drawings are given to us over here are wrong. These have not been considered over here, and I have told you why it is considered as drawings before, right? While discussing these both entries, I have told you why is it considered as drawings, right? So first of all, I need to rectify my profit, I need to rectify my drawings, and then go for P&L appropriation, and then I should go for my current account. Clear? Okay. First of all, let us recompute the profits. So computation of revised profits. So net profit that is given to us, whichever is given to us. What is the net profit given to us? Rupees 60,000. Rupees 60,000 is the profit given to us. Remember? Okay. Now pass all the rectification entries and see how does this affect the profits. How does this affect the profits after rectification? After once you rectify the entries, will my profit increase or decrease? Depending on it, add or deduct it. Okay, let's see. So, first one, life insurance premium of week amounting to rupees 750 was paid by the firm. Should it be paid by the firm? No, sir. But it has been taken as what? As miscellaneous expenditure. That means because of this error, my profit was reduced before. Because it's an expenditure, and expenditure always reduces the profit. Because of that, my profits were reduced. But now I am rectifying this. Now I am rectifying the error. Whatever errors I have made, I am saying, oh no, the error was not should be done. So I am rectifying the error. Because of that, my profit will increase again. So add. So add life insurance premium. How much is the value? Rupees 750. So this will increase the value of my profits. Okay. Then next. Okay. Keep this at the end. I will tell you why. Okay. Look at this. Traveling expenses of rupees 3,000 of able for a pleasure trip to UK was paid by the firm. Has been debited to traveling and expense account. That means my traveling and expense account balance has been increased. Right? Because of that, my expenses has increased. Because my expenses increased, my profit has reduced. Because of this, my profit has reduced. So whenever profit reduces because of this error, my profit has reduced. Now I am rectifying the error. Because of that, my profit will increase again. So add 3,000 rupees. Whatever traveling expense was there. Add traveling expense of rupees 3,000. Okay. Now, this will have two adjustments. Why? I will tell you. See, repairs of machinery amounting to rupees 10,000 has been debited to P&L account. First of all, there was a repairs which was a revenue expenditure. It has been wrongly taken to what? Plant account, which is wrong. Now, if I reverse this entry, if I rectify this entry and make it correct, this will go to where? This will go to my P&L account. Because of that, my P&L account balance will reduce. So, let's repairs. Rupees how much? Rupees 10,000 is the value of repairs. Okay. Then after this, what has happened? Because of this error, it has been taken to plant account and have charged depreciation on that also. Right? That means I have charged more depreciation. See, let us assume a small example. Okay. The value of plant is rupees 1 lakh. Okay. This was the actual value. If on that I have to compute depreciation at the rate of 20%, how much is the value of depreciation that I will get? It is rupees 20,000. But wrongly I have taken how much? Rupees 1 lakh 10 as the plant value and computed 20% depreciation on that. So how much will the value be? Rupees 1 lakh 10,000 into 20%. That will be rupees how much? 22,000. That means 20,000 was the actual depreciation, but 22,000 is the wrong depreciation taken. How much is extra depreciation charge? Rupees 2,000 is the extra depreciation charge, which should be reversed right now, because this is not the actual value. Rupees 1 lakh 10 is the wrong value, right? This is the correct value, right? Because of that, 2,000 should be reversed now. So in this case, 10,000 into 20%. 10,000 into 20%. How much will that be? Rupees 2,000 again. So 2,000 rupees will be added back to the profits. Why? Because I have taken it as a wrong depreciation. This depreciation was not supposed to be taken, but I have taken it. Now I am reversing it. When I reverse it, my profit will increase again. It's a negative figure. Okay. So add depreciation and mention the computation. Remember, always write the computations. So how much is the value? 10,000 was the wrong repairs taken to the plant account into 20%. That is rupees 2,000. So net total will be 750 plus 3,000 minus 10,000 plus 2,000. That will be 55,750. 55,750. Got it? So this is what my revised profit. Where will this be used? Where will this amount be used? In my P&L appropriation account as the opening balance. Remember, this should not be taken because it is wrong, because some of the rectifications have to be done. Clear? Okay, this is the first part. Now, what about these drawings? What about these drawings? Okay, let's make a small schedule. So, particulars. What is the partner's name? We have weak, we have able, and one more person's name was lazy, just like you people. So now start. Drawings that is given to us. How much is the drawings given to us? See, drawings 15, 10 and 10. Take the same values. 15,000, 10,000 and 10,000. Then adjustments, add or less, I don't know, wait. See, in these two cases, there was some drawings which was not taken, which was wrongly taken to the expenditures, right? But now when I rectify it, pass the rectification entries in your head. I won't be passing it again. So when I rectify this, when I rectify this error, the drawings will increase again, because this will be taken to drawings then, right? This will be taken. Should I take this to drawings? No, because it's the wrong fundamental error, right? Error of principle. Remember, this is also error of principle, which is affecting two accounts. One is drawings account, one is my expenditure account. Okay, expenditure account I have taken care over here in this part, but drawings now I need to take care of. See, now tell me, will this increase the balance of drawings or decrease the balance of drawings? It will increase the balance of drawings now. Okay, so 750 rupees for whom? For week. So I will just write it down over here. 750 rupees to week, it will increase, and to able rupees 3,000 rupees again increases. So able 3,000 rupees. After rectification. New balances rupees 15,750. This is 13,000 and this is 10,000 only. Then also compute the interest also. Interest on drawings. Compute it straight away here only. How much is the rate of interest as per the question for drawings? Drawings will be charged at 8% per annum. So 8%. So for 6 months. Why 6 months? I have averaged it again. I have averaged because in the question they are not given in the beginning or at the end of the year. Right? So, and some of these amounts are in between the year. Right? So because of this, what we'll do is, to simplify it, we will just take all of these figures at the 6 months rate, at a par rate. Okay? So 15,750 into 8%, that is the rate of interest on drawings, divided by 2, or 6 months, that is rupees 630. Same you can do for remaining ones. 13,000 into 8% divided by 2, that is 520. 10,000 into 8% divided by 2, that is 400. So this is my answers for my drawings, interest on drawings. Where will this be taken to? To the P&L appropriation account first, and then to the partner's current account. Remember? So they have asked you to prepare a P&L appropriation account. Okay, so start with it. This is my what? Appropriation account. Debits. Great. What I will do is, Let's start. So first of all, opening balance. Should I take 60,000 rupees? Should I take 60,000 rupees? No sir. Why? Because I have to take how much? The revised value as per working note number 1. As per working note number 1, whatever revised values I have to take that. So in my P&L appropriation account, so by profit and loss account, as per my working note number 1, how much is the value? 55,750. After this, what else? Interest on drawings is there, right? So by straight away what we will do is partners current account, right? Weak, able and lazy. What are the values? 630, 520, 400. 630, 520 and 400. What's the total of this? 630 plus 520 plus 400 rupees 1500. Then I think there is interest on capital also, right? Interest on drawings is done. Okay, interest on capital is already 10% per annum. So we will assume that capital has not at all changed. Capital amount whatever is there is not at all changed. Assuming that, find out the interest. So again, to partners, which account? Current account, because interest will be taken in the current account. Remember, we have weak, able and lazy. Are you people lazy? Yes sir. So 75,000 into 10%, so that is 7,500. Just remove one on zeros, you will get the answers. And 3,000. Okay, 10% is the interest on capital. What's the total? 7,500 plus 4,000 plus 3,000 equals to 14,500. 500. Okay. Now anything else remaining? I think no, because see, on current accounts whatever the balance will be, on current accounts never ever take or compute interest on capital. Remember this, okay? Capitals, if we are following fixed basis, in that case it will be only on the capital account balances. But if we are following fluctuating system, in that case there is no current account that is maintained. So obviously we need to compute it on capital account only. Okay, there is no more account that is available. Fine. So now find the closing balance. 55,750 plus 1,550 minus 14,500. That will be how much? 42,800. Okay. Now divide this among the partners in what ratio? The ratios are already given to us. That is 2:1:1. So where will you divide it? In capital account or current account? In the current account. To partners current account. We have again weak, able and lazy. Remember the method I have taught you. 42,800 divided by what? Divided by sum of this. 2 plus 1 plus 1. It is how much? 4 divided by 4 equals to. You got answer. It is 10,700. Now divide this among all the partners. So into 2 equals to, that is 21,400. 1 equals to 700. Again 1 equals to same answer. Okay, this is how you divide the values. Clear? Okay. Now let's prepare partners current account. So now I have prepared the partners current account format. So what entries comes into partners current account? Only the entries which are except the capital adjustment entries. Remember? Okay. So do we have opening balances over here? Do we have opening balances? Yes sir, we have opening balances. Where is the opening balance given to us? These are all the opening balances, right? So 10,000 and 5,000 is a credit balance. So by balance brought down. So for weak 10,000, for able 5,000, and for lazy it is a debit balance of rupees 5,000. Debit balance of rupees 5,000. So to balance brought down rupees 5,000. Okay. Then go on passing all the entries that were available in the P&L adjustment account. So P&L appropriation account. Okay. So first of all we have what? Let's start with the Interest on capital. This is the interest on capital figure. Okay. So by P&L appropriation, that is my interest on capital. How much is the value? 7,500, 4,000 and 3,000. 7,500, 4,000 and rupees 3,000. Then we have profit division. So P&L appropriation account again. Profits appropriated. How much? 21,400, 10,700. 21,400, 10,700. Then after this, we have drawings, right? Before interest on drawings, we will write down drawings amounts. So are these the new drawings amount? No sir. Where is the drawings amount? This is the new drawings amount. Right? But one thing you remember over here, okay. See, these drawings cannot be directly taken over to the capital account. Why? Because we need to pass the rectification entry. How to do that, I will tell you. See, we know that drawings comes on the debit side. Yes. So first of all, write down the exact values of drawings given in the question. So that will be what? 2 drawings. What are the values? 15,000, 15,000, 10,000 and 10,000. So 15,000, 10,000 and 10,000. Yes. Okay. Next 2. See, first of all, let's go to the first entry. In the first entry, miscellaneous expenditure account was wrongly debited. Now I have to credit the account. So because of that, credited is what? The miscellaneous expenditure, but debited is the partner's capital account. So 2 miscellaneous expenditure. How much is the value? Rupees 750. Towards whom? Towards week. 750. Okay. Then again over here for the last entry, traveling expenses towards able for rupees 300. Same adjustment over to be done over here. Expenditure towards able rupees 3,000. Okay. At the end of the day, if you see, this will be totaled with this, with these figures. If you want to check, just check it out. Okay. Okay. So drawings is done. So interest on drawings is pending, right? Interest on drawings is pending. Let's extend this. Okay. So to again P&L appropriation account for interest on drawings. What are the values? 630, 520, 630, 520 and 400. Yeah. So every other adjustments are done. So now close the accounts. So first of all, week 10,000 plus 7,500 plus 21,400 minus 15,000 minus 750 minus 630. The balance is 22. $520. Then able 5,000 plus 4,000 plus 10,700 minus 10,000 minus 3,000 minus 520. 6180. Okay, next lazy 3,000 plus 10,700 minus 5,000 minus 10,000 minus 400. Negative 1,700. So the answer will be on the other side, that is on the credit side. This is by balance carried on for lazy, and over here 2 balance carried on for week and able. This is how you prepare the current accounts. Okay. So this is the end of your unit 1. So there are some other questions remaining in your textbooks which you can just try solving, because all of them are like really easy ones. Okay. So don't bother too much about those questions. Go on solving it. And if you have any doubts in those questions, you know what to do. Drop the questions in the Telegram channel. Cool. Okay. Thank you.